Good morning, you're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Wednesday. The country's debt stock rises by almost 20%, pushing the debt to GDP ratio above the international threshold.
The bellwether PSE index is seen to climb to up to 8,400 this year. That's according to Call Financial on the back of a continuous drop in COVID-19 infections.
As Metro Manila de-escalates to the more relaxed alert level 2, the government clarifies that LGUs can still impose restrictions on the unvaccinated.
And the government think tank says the country needs to improve its openness to trade to fully benefit from the RCEP. We begin our broadcast with the country's outstanding debt slipping past the international threshold for developing economies.
Now, despite the multi-trillion peso figure, the Treasury says the debt to GDP ratio remains sustainable. Fresh data from the Bureau of Treasury shows that government debt jumped by almost 20% to 11.73 trillion pesos as of end December. This pushed the debt to GDP ratio to 60.5%, higher than the 54.6% recorded in 2020 and slightly above the 60% threshold considered as manageable by multilateral lenders for developing nations. It's also the highest debt to GDP ratio since the 67.5% seen in 2005. The Treasury says the ratio remains within the sustainable level as the economy continues to recover from the effects of the pandemic. The government has been ramping up its borrowings to finance its COVID-19 response programs, which includes the purchase of vaccines. The end 2021 debt stock was slower than the expansion of almost 27% recorded in 2020 due to better fiscal performance and lower financing requirements. Now, Metro Manila residents are slowly returning outside now that restrictions have eased under Alert Level 2, but the Interior Department clarifies LGUs can still impose mobility curbs on unvaccinated individuals. Mon Gualvez reports.
Commuters are now boarding buses and other PUVs to their destinations with fewer things to keep in mind. This is after the lifting of the no vaccination, no ride policy with Metro Manila back to Alert Level 2.
Dati po kasi chinecheck namin lahat, yung mga vaccine card, kung fully vaccinated na sila, ganun, kasi bawal po talaga eh.
Hindi na rin po masyadong abala sa biyahe, sir. Pagka yung iba kasi walang vaccine, sir, na ano pa kami, nadadami pa kami mga may vaccine, sir.
Under Alert Level 2, kids are also allowed to travel. In fact, in this mall in Mandaluyong, children are already taking a stroll around. Upon entering, vaccine cards are no longer being checked. Mall goers just need to show their city's QR code for contact tracing. The Metro Manila Council have no objections with the IATF's decision to ease restrictions. But for the Interior Department, LGUs should still have a say on the restrictions, especially for the unvaccinated. In Pasay City, an ordinance barring unjobbed people from leaving their homes unless it's for work or other essential travel is in place. MMDA Chairman Benhur Abalos sees no problem with this.
Ever since, be it Delta, be it the Wuhan virus, be it the South African or the UK, tanungin natin sarili natin, saan nagsimula lahat ito? Di ba always NCR?
However, Abalos says he will still try to reason with the Pasay City LGU since they have been advised to follow Alert Level 2 restrictions set by the IATF. For News 5, Mon Gualvez, We Are One News.
All right, Dan, Asian markets still enjoying the Lunar New Year festivities and break. Meanwhile, traders are back on their desks here in the Philippines. Is the uptrend continuing at the open?
The short answer to that, Jess, is yes. Take a look at our index here, 74.71. That's a hefty 1.5% increase already. And this is after we ended last Monday before the break yesterday with a bang. That was on the back, of course, of that alert level 2 announcement. We were already touching a 9-week high. And already, as reported in the headlines, a bunch of houses giving their year-end forecast quite bullish there after that fourth quarter GDP bounce back better than expected. You have, for instance, FMIC and UANP saying they are looking at 8,100 levels this year. You've also got Call Financial. They said that retail investor sentiments have shifted to bullish. More than 65% of investors are expecting a weak to strong bull market in the next 6 months. And they also said that almost 6 out of 10 investors, so 60%, they expect the pandemic just to end after the Omicron wave. And 4 out of 10 are still looking at the outcome of the May presidential elections. They're seeing that as the biggest market risk. So Call Financial is looking at 8,400 this year. They're saying that this is as the pandemic turns endemic, and that is quite an increase because it's 14% up from Monday's level, and that assumes 21% of earnings per share growth and a 19 times PE valuation. However, not everything rosy yet, Jess. You've still got foreigners looking at exiting. In fact, one of those key risks is the foreign selling that we were seeing in 2021. And you can look at my terminal here. Essentially, hot money continued to exit last year. We had the third straight year of net outflows. We saw a net outflow of just around $575 million last year, and that's way beyond the $1.5 billion net inflow projection that the BSP was hoping for. But still, we were doing much better than 2020. In 2020, we had a net outflow of $4.24 billion. So still generally better here. And just a quick peek on our local unit here. We are weakening a touch, actually breaking through 51 yet again, 51.098 to the greenback. Now, Jess, here to discuss the latest prospects on the equity space in particular. We have with us Japheth Santiago of Phil Stocks. Hi, Japheth. Welcome back and happy Lunar New Year.
Hi, Ma'am Danny. Thank you very much for inviting me on your show. Happy Chinese New Year.
All right, so Japheth, quick reaction here to the 7,400. Are we going to be reaching 7,500 levels on the back of that apparent alert level 2 and all of these positive news not yet priced in still after Monday's rally?
Yeah, there's the possibility that we could reach 7.5. In fact, what we mentioned in our report is that if we are able to hold our ground above the 7,300 level, that was our resistance before. If we are able to hold our ground at 7.3, then the trading range that we are seeing right now is from 7,300 to 7,500. Now, if you're going to look at sentiment, it's quite bullish. We're picking up from the GDP report, which is above expectations, and we're seeing that this recovery momentum could be sustainable this year, especially right now. The Omicron or the COVID-19 cases, the surge in the COVID-19 cases due to the Omicron variant is already seen to be waning. In fact, yesterday, the new cases have gone below 10,000 already. So that's one positive sign. Another thing, the alert level restrictions in selected areas in the country has been downgraded, and that includes the National Capital Region, which is the biggest contributor to the economy, so more than 30%. So this is expected, the downgrade and its restriction is expected to give a big boost to our local economy. It will help in keeping its recovery momentum. So there are a lot of positive expectations with respect to the economy right now, as well as signs. You can also add the bank lending data, which just came out. So it's up last December 2021, showing that there's already a confidence building towards the economy. So a lot of positive signs right now, and I believe that's what's pushing the market upwards.
Well, your projection just came true. We just broke 7,500. Take a look at that. Our index now trading at 17.50. That's in the short term, Japheth. What about in the long term? Have you guys also revised upwards your year-end forecast?
For 2022, we're still working on the projections, where the market could go. But these are the levels that we can look into chart wise. So as mentioned a while ago, we are the trading range that we're seeing for the market is 7,300 to 7,500. If the market could, we're seeing right now that the market has already breached 7.5. If it could hold its ground above 7.5, then the next level that we are already seeing is 7,900. That can be the next target of the market chart wise. However, there are still a lot of things that we have to consider before we could reach this point. Of course, first and foremost, we have to see evidences that the economy will continue with its recovery momentum, that the economic recovery will already go full swing, that we won't have any shocks anymore, particularly shocks coming from our COVID-19 situation, that our COVID-19 situation will continue to improve and this will lead to a further easing of restrictions in the country. Of course, we will also have to watch out how strong the economy will be in light of the threats that we are seeing from inflationary risk, especially with oil still up. And then you have the Federal Reserve, which is, which has already mentioned that they are planning to be aggressive or be on a hawkish stance this year. We have to see how strong the economy will be in light of these. And finally, of course, elections. Well, elections on the short run, they tend to be positive because they boost through spending, they boost the economy. If you're going to look at the historical data, the economic growth tends to outperform during presidential election years and driven primarily by investment. So in the short run, we can see a strong growth for the economy because of the election period. But of course, you also have to consider the long run, which is now dependent on who wins and what policies are they going to bring into the table. So those are the things that we are looking forward to right now. If we get all of those right, then yeah, 7,900 could be a possible target.
Okay. Now, Japheth, just one quick question here on one particular stock to watch when the trading is lifted or the trading suspension at 10 a.m. today. That's Dito Telecom. They did postpone, or at least for the time being, their SRO, citing market conditions. And this goes, against what we're seeing now, which is a bull market. So what's going on here, and does this reflect some sentiments of other companies that are trying to fundraise in these volatile times, or is this something specific to this company? Some analysts have said that it's really on the fundamentals of the company and not necessarily the general outlook.
I believe with respect to Dito, it's more of company specific. The sentiment is more of company specific. If you're going to look at the general market sentiment, really general market sentiment is not a problem. If you're going to look at other companies who have raised capital in the market recently, if you're going to look at Spinec was able to perform well in their offering despite the general market conditions back then, the threats from the Federal Reserve, the threats from the Omicron variant. Despite those threats being on the table, Spinec was still able to perform well with its offering. Same goes with Figaro. Figaro also performed well in their offering despite the overall threats to the market. So I believe this is not on the general. This is not on the general market sentiment. Rather, it's more company specific. It just goes to show that Dito CME, and in particular its telecommunication arm, Dito Telecommunications, still has a lot of proving to do. Investors may still be doubtful with respect to the company, particularly its fundamentals. So Dito CME may still have a lot of work to do in showing its, how strong it can be, how strong the fundamentals can be, how strong and how bright its prospects could be. Moving forward, I don't believe this is going to affect the other companies which are planning to raise capital in the market. By the end of the day, it will still depend on their fundamentals. If they can show a strong financial performance, if they can show bright prospects, just like what we saw with Figaro and Spinec for the prospects, then and if they're going to have that attractive price in their offering, then they would still perform well once they raise capital in the market.
All right, so company specific issue there as we are watching what happens to the stock price after the trading halt is lifted. Thank you so much for those insights, Japheth Antiaco of PhilStocks.
You're very much welcome.
We're keeping our eyes on. Economic managers have released a national asset management plan to maximize public funds for infrastructure projects. The NAMP covers fiscal years 2022 to 2023 and provides information that can be used by the government for timely infrastructure investment decisions. Concerned agencies said the two-year plan will be used to spend the country's limited resources on assets that need funding most. It will focus on assets that have a significant socio-economic impact to the country, including schools, government buildings, roads, dams, and hospitals.
The SEC will soon implement the cap on lending rates set by the Bangko Sentral to regulate the exorbitant interest rates imposed by lending firms. The BSP has set a nominal interest rate ceiling of 6% per month for covered loans. And effective interest rate is also limited to 15% per month, while a 5% per month ceiling will be imposed on the penalties for late payments. The caps apply to unsecured general purpose loans not exceeding 10,000 pesos and payable within 4 months. Non-compliance with these new caps will result in a 50,000 peso fine for financing companies and 25,000 pesos for lending companies for the first offense.
Now, coming right up, the country's ratification of the RCEP agreement hangs in the balance as the Senate is scheduled to go on a break in 2 days.
More of that and other stories after the break. Stay with us.
And we're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
All right, so we're just 2 days away before Senate goes on break for the election season. And still no word whether or not the chamber will concur with the RCEP, putting in peril the country's inclusion in the world's biggest trade deal. The semiconductor and electronics sector has made known from the get-go their push for the ratification. To talk about that, we have Dan Lachica, president of SAPI, or the Semiconductor and Electronics Industries in the Philippines. Good morning, Sir Dan. Thank you for joining us today.
Good morning, Jess. Good morning, Danny. It's a pleasure to be with you.
All right, so, sir, time's ticking for the Senate to concur. What are you sensing here from the chamber? How hopeful are you that our inclusion to the RCEP will be ratified?
Well, our industry, the electronics industry, we're really hoping that the Senate will ratify our inclusion into the RCEP. I think among the 15 or so countries, we're one of 4, including India, Malaysia, I think Myanmar, and of course the Philippines, that need to ratify RCEP, which took in effect actually on January 1. This is important. I think this is important for the country because, as you know, RCEP represents about, in the global market, it represents about 50% of manufacturing sector output and 70% of the electronics output, which happens to be the biggest commodity export in the Philippines. We account for about 61% of the country's commodity exports, and last year we accounted for $45.9 billion of exports, which is 12.9% greater than 2020, and surprisingly, and thank God, it's about 6% higher than the pre-pandemic levels. And we just see the RCEP being quite helpful in the sense that, you know, with tariffs ranging from about 5 to 6%, and that will just increase our competitiveness compared to our RCEP member companies. So that will be beneficial. It will also hopefully encourage investments. I know that compared to last year, we accounted for a 48% increase in foreign direct investments. But compared to our ASEAN neighbors, to note, Vietnam, Malaysia, Indonesia, we're about 10 to 20% of the FDIs they're getting. So RCEP ratification, the involvement of the Philippines, as I've said, will improve our competitiveness and hopefully will be further attraction to foreign direct investments in the Philippines, which can be good not just for the electronics industry, but for the whole country.
Now, good thing you mentioned about those figures as to how it's going to benefit the electronics and semiconductor sector, but we're talking about a space that's pretty much well entrenched when it comes, of course, to global trade here. But you have a number of RCEP skeptics here, particularly those from the agricultural sector. They're pointing to purported gains from the RCEP being insignificant. At the same time, you have Senator Risa Ontiveros, let me just quote her here, saying, even if we don't ratify RCEP immediately, we would actually still continue to trade as we are trading today, saying that maybe RCEP will not really change anything. She also cited studies showing that the balance in trade of goods will worsen as imports will grow at a faster rate than exports. So make your reaction to those sentiments.
Well, it's true. With or without RCEP, trade will continue. The question is, at what level, right? I mean, when everybody else, the rest of ASEAN, the rest of the world are increasing their competitiveness, wouldn't we want to participate in this growing pie, if you will? I think RCEP will benefit not just the electronics industry, but who wouldn't want to have a 5 to 6% break in the tariffs? And this is both for exports and imports, right? So I really think that yes, trade will continue, but we're looking forward to further increasing not just trade, reduce the trade balances and all, but also including increasing the foreign direct investments.
All right, given that as well, you have a study here, at least from the PIDS, saying we're not really open enough to actually fully realize the benefits of RCEP. At the same time, you have agricultural groups along the same lines saying that trade concessions will not be exclusive to the Philippines, giving us no guarantee really of good returns here. Are we really ready to compete with RCEP members once our membership is ratified?
Well, certainly, in terms of competitiveness, we have a long ways to go. Like I said earlier, just in terms of competing for foreign direct investments, while we saw an increase compared to last year, we're still way behind compared to what our ASEAN neighbors, let alone the big economies involved with RCEP, China, Japan, South Korea, Australia, New Zealand. We're not anywhere to that level. So whatever gains we have, whatever incremental advantages we have in increasing trade would be beneficial. So long term, I think it's beneficial, and certainly that's why we're encouraging the Senate to ratify RCEP participation sooner than later.
All right, definitely. Again, you are once again pushing for the ratification of the RCEP, at least our membership. We have 2 days left before the Senate does that. We're still, of course, on wait-and-see mode for that. Thank you very much for your time this morning, SAPI President Dan Lachica. Thank you, sir.
You're welcome, Jess.
Now, before we end the broadcast, we invite you to catch the 2022 presidential aspirants as they face the nation in Panata sa Bayan, the KBP Presidential Forum, in collaboration with the Kapisanan ng mga Broadcaster ng Pilipinas. That's on February 4th at 9 a.m.
Now, tune in to Signal TV Channel 250 HD and Channel 8 SD, also available on Signal Play. And that's a first look into the business day this Wednesday, February 2, 2022. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.